In this video, I'm going to recap a trade that I took on Friday, September 9th. This trade was posted in the Income Navigator chat for members that want to follow along, to learn to make such adjustments. Now, if you're new to the channel, please subscribe and leave a comment with your thoughts about this trade. And if you're already subscribed to the channel, please like and share this video with others. With that said, we're going to dive right in. With about 30 minutes left in the trading day, I initiated a 10-point wide call debit spread. I bought to open 40.65 call and I sold to open a 40.75 call. This was a 5-lot trade. I paid $5.90 for the spread, risking $2,950. As the market pushed higher, I closed 2 of the 5 spreads for $7.90 credit, collecting $1,580. This took my risk from $2,950 to $1,370. Now I was left with 3 call spreads remaining. And this is what the risk profile looked like after making the first adjustment. About 13 minutes into this trade, I rolled the remaining 3 of the 40.65 calls up to 40.70 strike for a credit of $4.25. I collected an additional $1,275. Now that took my risk from $1,370 to just $95. Now I was left with 3 5-point wide call spreads. And this is what the new risk profile looked like before I made the following adjustment. Now my next adjustment, which was 3 minutes later, I closed 2 of the 3 remaining 40.70, 40.75 call spreads for $2.80 credit. I collected an additional $560, and now I have recovered all of my initial outlay, and I was left with a net credit of $465. Now this is what the remaining 1 call spread, which was 5 points wide for a net credit of $465, looked like. Now with about 9 minutes before the close, I went ahead and I sold to open 1 of the 40.75, 40.80 call spread, right? This was a call credit spread. I turned my position into a balanced call butterfly. I collected an additional 95 cents, which increased my net credit from $465 to $560. Now going into the close, I was left with a 40.70, 40.75, 40.80 call butterfly for a net credit of $560. This means that if SPX is under 470, I get to keep the $560 credit. If SPX is above 4080, I get to keep the $560 credit. And if SPX pins the short strike of 4075 at the close, I'll make an additional $500, making my total gain of $1,060. Now, S&P 500 finished at 4067.35, and my remaining call butterfly expired out of the money, making my total gain $560. Now, this trade has generated a $560 profit on $2,950 of risk, which is about 19% return in the last half hour of the trading day. If you enjoyed this content, please consider subscribing to this channel, liking this video, leave a comment, let me know if you make such adjustments in your trading, and please share this video with somebody that you think could benefit from it. Until next time, if you take care of the risk, the profits will take care of themselves.